This is Mark to Market, a podcast of BT correspondents.
Hello everybody, I'm benpaul. Welcome to Mark to Market, a BT correspondence podcast. With the strong performance of the Singapore market over the past couple of years, many smaller cap companies have been garnering a lot more investor attention because of the potentially higher returns they offer. One company that has been performing especially well and which has a particularly interesting story is Polo Marine. The company is riding some very positive secular trends in the energy sector. It has been actively raising money from investors to expand its operations, and it's seeking to separately list some of its key business units. Joining us today in the BT podcast studio to talk about all of that and more is Shawn Lee, the CEO of Polo Marine. Shawn, thank you for being with us today.
Thanks very much for having me here.
Shawn, to many investors, Polo Marine may seem at first glance to be a traditional offshore and marine player. The group charters vessels that serve the offshore energy sector, and it has a shipyard in Batam. However, a big part of your story is related to the development of offshore wind farms in places like Taiwan and South Korea. So maybe we start there. When and how did you come to realize that the offshore wind energy sector was the key to your company's future? And how did you go about breaking into Taiwan?
The story starts during 2018, straight after the debt restructuring of the company, right? So what I did was I went to Taiwan. I heard a lot about the wind sectors there. So I went there trying to find out what exactly they're trying to do there. But 2019 onwards, our vessel started to work in Taiwan. During the COVID, when all the vessels start to come back because no work. But Taiwan is actually relatively quite active. So vessels continue to work there. And I thought, okay, that's interesting. So what I did was I went to Taiwan, endured the 14+7 quarantine many times, and started to talk to different people from the wind developers, turbine people, and also the EPC to find out exactly what they actually need. Back then, I was trying to find an angle there. And that's when I realized that the offshore wind industry in Taiwan are booming. Different stages need different sorts of vessels. That's how we use our previous experience in offshore oil and gas and try to penetrate into the market, repurpose some of the vessels that we have for the oil and gas, and then start to work in Taiwan.
It can't have been smooth sailing, so to speak. I mean, what hurdles did you encounter when you were trying to get into that market?
Yeah, so basically it's a new territory to start with, right? They have their own requirements, the localizations, the cabotage, for example. You need to have vessels that's flying Taiwanese flag. And also with the Taiwanese flag vessels, you need to have 2/3 Taiwanese crew. The problem is in Taiwan, there isn't much of offshore to start. Finding the right crew, almost impossible.
Starting from scratch.
So we really have to train them from scratch, basically training different seamen to really understand how the offshore actually works. It took time, but that was very challenging because of the localization needs and all that. And until today, it is still challenging.
So from your filings, it seems like the platform that you're using to expand into Taiwan is PKR Offshore. Can you just tell us a little bit about that particular unit?
So we use PKRO to continue to expand our offshore wind side of the business because we start in Taiwan because they start earlier than the rest of the North Asia, for example. Using that platform, our intention is to grow from there to Korea and Japan market. And we bought that company in 2022 and we started to inject vessels and we built CSOV, for example, that's actually focusing on the offshore wind sectors.
So the vessels that are serving that market are held under PKRO?
Yes, correct.
I've heard a lot about these vessels. There is this one particular vessel called the Wind Archer. How is that different from the rest of the anchor handling tug supply vessels that you have?
Right. Okay. So anchor handling tugs is actually commonly used in the oil and gas. Its functions is to tow the rig, for example, the positioning, anchor handling. Of course, supply run as well. Normally, we use the anchor handlers during the construction's installation stage for the wind sectors as well. Wind Archer, basically CSOV, commissioning service operation vessels. You can simplify it as a floating hotel with a very sophisticated gangway that can transfer technicians from the vessels to the turbine. The concept is, you know how camera gimbal works, right? While you're moving all around, but your camera kind of sets still. And that's almost similar kind of concept for the gangway. And also there's a warehouse in there as well. It's accommodations, floating hotel with sophisticated gangway, and also warehouses to house your spare parts and wear parts.
And this vessel was built by your yard?
By Marco Polo Shipyard.
Where did the technology come from?
Well, when I go to Taiwan back then, I try to understand what they really need. That's where they're saying that they need a CSOV, for example. And I was thinking, why can't we design this in Singapore? So that's when we started to work with the Singapore Naval Art and design this in Singapore.
So it's made in Singapore?
Built in Batam.
Built in Batam, designed in Singapore.
Designed in a Singapore company. We built the vessels from scratch. And we just won the offshore vessel of the year for that particular vessel this year.
And I imagine you're going to continue building these sorts of vessels.
That's correct. So we have a second unit. We have a CSOV Plus. So why I call it Plus instead, because we've got some other equipments on board that raise the capability of the vessels, that we can do some subsea work as well. And also we can do cable repairs for the wind sectors. It increases the flexibilities of the vessels.
I just wanted to touch on your client relationships. I've heard you refer to them as partners rather than clients. Who are your major clients in this segment of the market?
We talk to the wind developers. We talk to the wind turbine makers. We talk to the EPC, wind developers like Ørsted, CIP, for example. These are our clients and also our partners. The turbine makers, Siemens Gamesa, Vestas, for example. So why we call them partners? Because when we go to a new territory, for example, they always like to invite the people they work closely with, and we are one of the vendors.
So the client relationships are a means of expanding your market.
That's exactly right. So it's a longer term. It's not like a short term. When we design the vessels, before we build them, we actually engage the clients to find out exactly what they need and then design according to what they need. So there's no surprises. They understood what we have in terms of fleet. It's easier to work that way. That's why it's more partnership rather than just a clients and vendors kind of relationship.
It also sounded like you're working with the Taiwanese authorities as well in this particular sector, as it is beginning to flourish.
Any wind farm, any place you go, you have to work with the local authority, like it or not, right?
Right.
I mean, they have their own requirements. In Taiwan or even in Japan or even Korea, they will have their own cabotage, for example.
Well, I was referring specifically to the contract with the Taiwanese government on safety vessels and so on.
No, if you're talking about wind, it's separate. We don't deal directly with the government. If you're referring to, for example, the research vessels that we want to build, that's a totally different thing altogether. That's requirement from the Taiwanese government.
Ah, okay.
And that's a research vessels.
Okay.
That's a separate thing altogether.
All right. Marco Polo Marine has said it will list PKR offshore in the latter part of this year. It also announced in May 2026 that it will inject its shipyard into Fuji Offset Plates manufacturing for up to $139 million worth of new shares in what is essentially a reverse takeover deal. Why are you housing different activities under separately listed companies?
To start with, we are in a very capital-intensive industry. I mean, we continue to raise funds for our expansions and all that. It will be easier for us to have different platform to be able to raise funds without diluting too much of the shareholders in Marco Polo Marine, for example. And when we do that, it creates more transparencies, of course, because when I talk to analysts, when I talk to investors, for example, they always ask the relationship between our shipyard constructing vessels for our own fleet. In this way, you are able to see each platform by its own merits. If you would like to invest into the shipyard, you can do so just investing into MPSC, for example.
But, the flip side of that coin is that it does introduce complexities in the running of the group in terms of looking after the interests of different sets of minority investors.
Yeah, for sure. I think still manageable, right? Another thing also, because of this relationship, it has to be arm's length anyway, even more so, right?
So being a separately listed unit actually emphasizes the arm's length.
Yeah, I mean, you always can have certain first rights of refusal or some sorts, right? I mean, but whatever it is, it has to be arm's length anyway.
Can you just amplify that point? How do you decide, for example, whether to build a vessel at your own yard versus a third-party yard?
Of course, we have to get the quotations from different yards to compare, right? I mean, we can't be building more expensive unless there's a need to. When there's a need to, meaning that there are certain places where we have to build a yard outside of certain places, right? So for example, in this case, there are some vessels required and that's actually built outside of a certain country.
I see. Sean, one of the issues when listed companies decide to list their other business units is that they may end up suffering from a holding company discount versus the listed subsidiaries. Is that something that concerns you, and how would you address it?
Yeah, may or may not happen though. I mean, at the end of the day, it is still a subsidiary of the company, right? I mean, it's just listed by its own, but it's still a subsidiary of the company. And if you look at Marco Polo, we'll still be focusing on a lot more on the offshore oil and gas side. That part of it has not been spun out separately. As a whole, we have all these different listed bodies, but at the same time, they're also part of Marco Polo Marine. So if you want a holistic one, then of course, you can always invest to Marco Polo Marine. If you like just the wind side, for example, you can invest in PKRO when it's listed in Taiwan. If you like just the shipyard business, you can just invest into this separate vehicle.
So if I hear you correctly, you're not that concerned about a holding company discount because Marco Polo Marine itself has a separate business.
The ultimate beneficiaries of the whole thing anyway. No matter which one you're growing, at the end of the day, the holding is going to be benefiting out of it.
The most recent annual report for Fuji Offset Plates shows that members of Apricot Capital's Teal family and Dynamax former executive chairman Lim Ah-cheng were among its key shareholders. Was this a factor in Fuji Offset becoming the listing vehicle for your yards?
I think the merits of the deal itself, I mean, we want to do a separate listing. We have to look at either IPO or RTO. In this case, we chose RTO. If that's the case, RTO, which vehicle we're going to use. Fuji Offset has got a clean balance sheet and also some cash in the company as well, which is good. The fact that AC and Apricot, there's some common shareholders as well. There's certainties on the deals as well, make it much more manageable in that sense.
Is AC going to have a role in your shipyard operations?
We're going to announce that if there is anything. Of course, the fact that AC, there is some potential collaboration, I guess, on that front. So, of course, all these are some of the factors that we consider for the RTO.
The Mark to Market podcast will be back right after this.
Market Focus Weekly, now hosted by Howie Lim. A sharp weekly deep dive into what's moving markets in Singapore and across the region. With analysts and market insiders to break down the forces shaping the week ahead. New episodes every Friday, powered by the journalism of the Business Times. Find Market Focus Weekly wherever you get your podcasts.
And now, back to Market, a podcast of BT correspondents.
Welcome back. This is the Mark to Market podcast. I'm benpaul, speaking with Marco Polo Marine CEO Sean Lee. Sean, offshore and marine stocks were once a very lively segment of the Singapore market, but after the 2014 oil slump, many of them disappeared. What went wrong back then? And is there a risk of another major industry-wide bust?
Back then, I think we all know that the market was very hot. We are in a capital-intensive industry, and most of the companies will leverage with the banks. And back then, liquidity was readily available as well. So a lot of us back then, because the margin was so good back then, you built the vessels. We're talking about leveraging a long-term assets with a short-term loan. Okay, that's when you have a very good margin, that's okay. But when your utilization becomes an issue, when oil prices started to go down and all the activity started to stop and all the vessels started to come back, that's when you don't have much of an income. If there's no income, you can't pay the bank loans. And that's where everything just collapsed.
So how did Marco Polo Marine manage to survive? And are you concerned that there is another bust coming?
No. Certainly, of course, in the past, it's easier to borrow from the banks, right? I mean, today is a lot harder because the banks has burned their hands as well. So they are very careful whether they lend to anybody right now. So the liquidity is not, as free as before. So meaning that any one of us who wants to build vessels today, I mean, in the past, you have equity of 10%, 90% borrowings, or even 20%, 80%. But now today, we're talking about 50, 60% leverage.
So there's a lot more caution in the industry.
Yes, of course.
And so you feel that you're not anywhere close to a bust?
No, because in the first place, to attract people to come into this industry, first of all, the charter rates is not fantastic. I mean, compared to what it was before, it was like more than $3 per horsepower, for example.
What is it now?
$1.50 or $1.80 maximum. And we're not even halfway there. Back then, the margin is like 80, even close to 90%. Today, we don't have that kind of margin. So meaning that won't attract too many people coming in to invest. So charter is not that. Utilization is not there. It's not like what it was before, like 90%. Now it's like 70, 75%. I mean, it's good enough, but it's not attractive enough for people to come in. And on top of that, getting financing from the banks is a big issue as well. So if that's the case, then the supply won't be overwhelming. The demand is still there. The supply won't appear anytime soon. And there's a gap to build the vessels, right? For example, if today there's demand for it, there's still 2 years gap for you to build the vessels. And when that happens, of course, the whole market will realize it.
Is the wind energy sector less cyclical than the traditional oil and gas sector?
Oh, yes, it is. You have a project in wind, you have to finish it. And after that, you have to continue to operate the wind farm. That's when the operation and maintenance will come in. And that will be like 25 years. So for oil and gas is different. If the oil prices started to go down as low as $20 or $30, that's when the activities will stop. Then there won't be much of a drilling. If you don't have much of a drilling, then you won't need a lot of vessels to support.
So the pricing for wind energy is less volatile than oil and gas?
You can say that, yes.
Have the wars in Ukraine and in the Middle East been a positive factor for O&M companies in this region?
I think everybody's actually started to worry about energy security. And because of that, and countries that was hesitating in terms of developing their own energy security started to push the button. And look at the wind farm, for example. Some countries were slowing down a bit, but because of this war, they realized that they need to build up their own energy, in this case, renewables.
So it's not just that oil prices have gone up, there's a security element too.
Oh, yeah, for sure.
What would you say is the biggest macro driver for your business right now?
I think the fact that the energy security is an issue, and that drives, the wind sectors as well. At the same time, people start the drills as well, rather than depend on other countries. If they have oil deposit, they'll start to drill themselves. Because a lot of vessels are, like you said, the last boom was 2015 or 2014. After 2014, 2015, there's not much of a building of new vessels in the market, meaning that those in the market today are just too old. They need to be renewed, replaced. So that's another interesting one for us in terms of our shipbuilding side of it.
MAS and SGX are encouraging companies to adopt a more shareholder value focused approach in conducting their affairs. What are you doing to make Marco Polo Marine attractive for long-term investors?
To start with, we are a growing company. So we are one of the only one in the wind industry that's able to build, own, and operate these vessels. Mostly people who own vessels, they don't build their own. People who build vessels, they don't own these vessels. But we have one-stop shop, fully integrated business model. That sets us very different from the rest of the people.
The thing about Singapore investors, they just love dividends. And I know Marco Polo Marine's dividend has increased, but it's not a very high yield.
Yeah, so...
Are you ever going to be a high dividend stock? Or are you just growing too fast?
Not entirely. Like, we are in a very capital-intensive industry, meaning that we're always continuously needing funds for us to grow our fleet, for example. So this is a balancing game, right? If you are having too much cash, then of course, you don't have anywhere to grow the company, right? So of course, you sit with a pile of cash. It's better off to give more dividends. But at this stage, we're still growing quite quickly. We have no intention to become a high yield stock until we stop growing, and then that will come.
So as a growth company, what do you tell investors about what they should look out for? I mean, besides revenue and earnings, what financial and operating metrics should investors track to better understand what's happening at your company?
I think more on a macro level, if you look at the market conditions, what utilization rates has gone up, whether or not the supply and demands is balancing and all that. These are the factors that should be looking at. And demand in the renewables. Is there more wind farm being built? Is Korea or Japan pushing faster than before in terms of building all these wind farms? That will translate to more requirements for more vessels on the wind side. In the shipyard side, for example, is there more new building, shipbuilding side, or repairs and maintenance? Repairs and maintenance are recurring for us. So it's actually quite a stable one.
Sean, there have been changes among your substantial shareholders. Hallam Investments now holds 5.8% of the company. Apricot Capital holds 12.1%. Your family holds 21.8%. As the single largest shareholder of the company, what are your long-term intentions? Are you building the group for an eventual sale, or is this something that you plan to hold on to?
We love to continue to grow, to be honest. And that's the reason why we are setting up the way it is, right? Different business has its own platform to be able to grow by its own. I'm here to build. In fact, that's what I want to do. What's going to happen 10 years? Nobody knows. But at this stage where we're growing, I think we are at the right time.
Okay, so you say you're going to build and you're going to grow. What would you say is your long-term vision of the company? I mean, 10 years from now, what is Marco Polo Marine going to look like?
I think we have a pretty strong foothold at this moment in Asia. In terms of that, I think the Marco Polo Marine will one day become one of the powerhouse in terms of the marine sectors. I'm talking about more offshore, wind, and also the offshore oil and gas related. And of course, the shipbuilding side as well. If you notice, we don't build merchant vessels. We specialize in offshore vessels, and that's what we want to do and continue to grow that part.
So you're going to be a leader in that field?
Yes.
How would you make Marco Polo Marine more attractive to younger engineers and naval architects and so on? How do you bring in the next generation of employees?
Well, if you look at how we design the CSOV, you can actually look at how the concept, the philosophy behind this whole thing is comfort. If you look at the design of the CSOV, it's like a hotel, actually. So I'm always joking with people, you know what? It's Instagrammable, right? You work to work. You can bring your coffee to work on one hand. So
the work environment is less harsh, is what you're...
yeah, of course. And for the wind sectors, it is. And oil and gas is also slowly adopting that as well in terms of comfort. That's one. And also office environment, how we communicate with our people. There's a lot of different things that we need to do to update ourselves all the time. You work smart rather than work just hard, you know.
I would have thought the fact that you're building these technically more sophisticated vessels at your yard would be a factor in drawing ambitious engineers to you.
And also the fact that we are now in the renewable sector. A lot younger people are attracted to that, building part of the future. Clean energy, for example. Everybody's actually more excited about that. Unfortunately, we came from the oil and gas, and we're still in oil and gas, and that is still viewed as more traditional compared to renewables. That part of it excites a lot of younger people.
Okay, Sean, what leadership lessons have you learned from your time at the helm of Marco Polo Marine? I mean, you've gone through some very big cycles, and you are where you are now.
A lot. Business-wise, we never over-leverage ourselves, and there's always uncertainty, so we have to pace ourselves, that's for sure.
So patience is one thing.
Patience, and also, when you do fall and getting up again, never give up kind of attitude. And that's what happened during the debt restructuring. Now, I visited 150 people, got rejected 141 times. I never gave up.
So perseverance.
Perseverance is, of course, that's important. And seize the right time as well. Timing is very important. You never want to push anything that's not ready. And when the time comes, and you know it. In Chinese, 天时地利人和, the right time, the right people.
So stay optimistic for the future.
That's correct.
Sean, thank you very much for being here today. I certainly wish you the best of luck.
Thank you very much.
That's it for Mark to Market this week. BT Correspondents will be back next week with wealth editor Genevieve Kwa, so please keep listening. This episode was produced by Howie Lim, Chieh, together with our editor Claressa Monteiro, and it was written and presented by me. Thank you for listening. I'm benpaul.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.